Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In this video, I will present my analysis of last 30 years data of Nifty 50. Nifty 50 is one of the major index of Indian share market. It is the flagship index of the National Stock Exchange of India NSE. It represents the performance of the 50 largest and most liquid companies listed on the NSE, covering sectors like finance, IT, energy, FMCG, healthcare, and manufacturing. I'll present my analysis in form of few graphs so as it would be easier to explain and understand. Before moving on, please read the entire disclaimer carefully. So this is the yearly returns in percentage graph. This shows the yearly returns of Nifty 50 since 1996 all the way till March 2025. So this is the third week of March 2025 going on at the time of recording of this video. Now, the CAGR of last 30 years is 11.5%. I would say it's a very good CAGR considering that it's the average of last 30 years or the CAGR of last 30 years. 11.5 is a massive CAGR. There are few, we can see the majority is of the positive returns here. The negative return years are in minority. In fact, in last 30 years, the graph is for 30 years, only 8 instances of negative returns and 22 instances of positive returns. The best performing years were 2009 with the returns of 75.77, followed by 2003 with the returns of 71.91%, and at the third place is 1999 with the returns of 67.43%. The worst performing years for Nifty 50 were 2008 with the returns of negative 51.79%, followed by 2011 with the negative returns of 24.61%, and at third place is 1998 with the negative returns of minus 18.08%. So overall, it's good, positive to negative ratio, I would say. Let's move on to the next graph. This is the average monthly returns graph. This graph shows the 30 years average across every month, how the Nifty 50 has given the returns. This data over here shows number of positive years in that month versus the negative returns months. So for example, let's take the example of January. So in January in last 30 years, 12 years it gave positive returns. And in 18 years it gave negative returns. The average of last 30-year returns is minus 0.24%. The other month which has a net negative or average negative returns is October. So October has a negative returns of 0.25% over the last 30 years. There are few outstanding positive return months as well. For example, December. The average returns in December are 3.27%. 30-year average of 3.27%. Very good returns. November 2 very good with around approximately 2% returns. So as April with approximately 2% returns. July 2 seems to be a good month for Nifty 50 based on the historical data. Also, if you see, in most of the cases, they are more positive return years as compared to negative return years. In almost all the cases except I would say January and one is in May, that the average positive years is greater than the average negative years. Sorry, the number of positive years is more than the number of negative years. Let's move on to the next graphs, and this is basically a combination of two graphs. The upper graph is the graph which shows number of all-time highs each year in the last 30 years, and the lower graph shows the number of all-time highs in the last in 12 months in the last 30 years. So overall, in the last 30 years, there were 96 all-time monthly highs. So this data is for about, I think, 350 months, if I'm not wrong. So 96 all-time highs, and few years again are outstanding. For example, 2014, 10 monthly all-time highs in 2014. Same is the situation was in 2017 as well. 2024 too was going very good with 9 all-time highs, and we know what happened in the last 3 months of 2024, October, November, December. The market corrected significantly, and we are still in a recovery mode. We have not yet recovered from that correction, and at the time of recording of this video, which is the third week of March 2025. 2007 too was a very good year for Nifty 50, 9 all-time highs. 2005, 2006, and 2021 two were very good years for Nifty 50. If we see the same thing on a monthly scale, December seems to be the best months in terms of all-time high. So Nifty has created all-time high 12 times in the month of December, 11 times in the month of January, and 10 times in the month of July. Let's move on to the next graph. Now, this graph shows the major crises in last 30 years which have prolonged a negative impact on Indian market. Now, this is a very critical graph to understand how uh, uh, the domestic as well as global events have impact on Indian share market. Now, this you can see here the years. So there are three, 13, and this one is the 14th instance. And this over here shows the number of months it took for the Indian market to recover from the crisis. So 1997 is this one. So 1997 was the Asian financial crisis. Indian market took 23 months to recover from it. So the at the time this crisis hit us, the all time the Nifty level, it took 23 months for Nifty 50 to breach that level. In 2000, the dot com bubble burst. Markets all across the world crashed in this crisis, and it took Indian markets 46 months to recover. The third significant crisis was 2004 domestic political uncertainty. So the market took the election results of 2004 adversely, and there was significant correction in the market, and it took 11 months for the market to recover from the fall which happened due to the election results in 2004. In 2005, the oil prices rises significantly, and there was a correction in Indian market, although the market recovered only in 5 months from that correction. In 2006, global sell-off and FII exit was the reason of crisis, and the Indian market took 5 years to recover from that fall. 2008 was a significant crisis for all the markets across the globe. It was the global financial crisis, and the markets corrected by more than 30-40% across the globe, and Indian market took 71 months to recover from this. 71 months, that's almost 6 years. So Indian market took 6 years to reach the same level of Nifty once this crisis has hit the Indian market. So significant crisis in the Indian market history. Then came 2015 crisis of the Chinese market crash and global slowdown. Indian market took 24 months, that is 2 years, to recover from that. Next is the 2018 US China trade war. Indian market took 6 months to recover. There was another crisis in 2018, and it was a domestic crisis of IL and FS debt crisis. Again, it took 6 months for market to recover. So all these crises, they actually, in a way, push down the overall growth by this much amount of months, basically. In 2019, it's a Indian economic slowdown. Again, it took 5 months for the market to recover from this crisis. Then came 2020, the COVID pandemic crash, and the Indian market recovered in 10 months from that crash. In 2021, global inflation crisis took place, and the Indian market took 13 months to recover from that. In 2022, Russia Ukraine war started, and the global recession fears creep up. The market corrected significantly, and it took 6 months for the market to recover or regain that Nifty 50 level. And last is the 2024 geopolitical uncertainty, and this is still ongoing. We do not know at the time of recording of this video whether the market has created a bottom or formed a bottom or not. But it's now 6 months, and this uh, crisis is still not over for the Indian economy, and the Nifty 50 levels are still not yet recovered completely. Now let's see the final graph, which shows how much was the impact of these crises and how was the recovery of the Indian market. So this is a very critical graph. Uh, Let me first of all explain to you what signifies what in this graph. So this blue bars, months at peak. So basically these are the 14 crises which I have explained in the previous graph. On this x-axis we have these 14 crises which have prolonged impact on Indian market. So these are shown here. Um, these blue bars are the months at peak. These red bar shows the months to the bottom. These green bar shows the month it took the market to reach from bottom to the previous peak level. These red line shows the percentage and fall, and this green line shows the percentage recovery or the percentage rise. So let's understand it by taking an example of, say, for example, 1997. So in 1997, the due to the crisis, it took Indian markets 23 months to recover. Out of those 23 months, 15 months, the market was in downtrend, and the market loses 38% in those 15 months. Now the market recovers all that loss in next 8 months, and it gained 62% in those 8 months to reach the level which Nifty 50 was holding before the crisis hit the market. So same is the case for all the years. Let's take another example to understand it better. So let's take the example of 2008 global financial crisis. So in 2008 global financial crisis, the market took 71 months, that is almost 6 years, to recover. It took only 9 months for it to make a bottom, and it made bottom by dropping 64%. So the market dropped by 64% in 9 months in 2008. And then there was a long recovery. The recovery took 62 months, and the market gained 179% in those 62 months. So overall, the market took 71 months to reach its level before this 2008 crisis hit the market. So this is the analysis for all the 14, all the 13, I would say, crisis. The 14th one is the ongoing crisis. We are already down by 16.5%. There was a recovery in the last week, but I do not know whether the bottom has been formed or it's just a blip. So I cannot say for sure whether the bottom has been formed. So I have to leave this graph open ended. Now, how much time would this take? To be honest, I don't know. You have the data in front of you, you have graph in front of you. If you want, you can deduce. You can take the example, say for example in 2022, 11% drop took 3 months, and the recovery was completed in next 3 months with a 12% recovery. In 2019, the drop was 12.5%. It took 2 months for the drop, and it took 3 months for the recovery, and the recovery was of 14%. In 2018, there was a drop of 15% in a single month, and it took 6 months to reclaim that position, and the market rise by 17% in those 6 months. So you have the data in front of you, you have the graph in front of you. It's open for your interpretation. That is all from my side in this video. Thanks for watching it. Please subscribe to the channel, like the video, and comment. I'll be back soon with another video. Goodbye for now.